Hey everyone, and welcome back to this brand new video. Today we're going to be looking together at the results of our Strategy of the Month contest for the month of March. We're going to take a look at the selection of the most promising strategies from all the submissions that we've received, and then we're going to discover the strategy that won. We'll also give you operational insights by going through the basic logic of the strategies and observing their performance. As a reminder, Strategy of the Month is the contest reserved for Unger Academy students. Each month, they can participate by submitting a trading strategy and then competing for a chance to win a €1,000 Amazon gift card. I'm one of the coaches at Unger Academy, and before we start, I'd like to invite you to leave us a like and subscribe to our channel by clicking on the notification bell, and that way you'll always be informed about the release of all our new content. Okay, I've talked too much. So let's immediately show you the best three strategies. The first two strategies we're going to look at really impressed us, even though they didn't win. And right after that, I'm going to show you the winning strategy of the contest, which I can tell you right now is unique. Now, this first strategy is developed on the Bund future, the German government bond, and it uses a 15-minute time frame and a second time frame of 1,440 minutes, which corresponds to a daily time frame. The Bund session begins at 1:10 a.m. and it ends at 10 p.m. You could call this a fade breakout strategy, but let's just try to understand why. In this session, prices made a low at the point that I'm showing you now, and in the next session, they fell below that low. Now, if they rise above the low that we're talking about, we'll enter a long position. And in that case, we'll close the position with a profit target at that level. Obviously, on the short side, we'll do the opposite thing. The strategy uses monetary stop loss and take profit and closes all remaining open positions after 7 days. Let's look at the metrics to see how this strategy has performed from 2010 until today. Okay, we see a net profit of €100,000 versus a maximum loss of €8,500. So the ratio of the two is greater than 10 and is an excellent metric. Now, I'd say the curve is increasing and very smooth. We certainly appreciate the curve of the long trades. And as for that of the short trades, we see how well the strategy weathered the downturns in the bond markets, which we see plummeted from 2022 onwards. The average trade of almost €240 is an excellent average trade for this instrument. And if we look at the profits year by year, excluding 2016, we see that the strategy has consistently delivered excellent results. All right, let's move on to the second strategy in our selection. Our student developed it for gold futures using a 5-minute time frame. You could call it a breakout strategy from the previous day's highs and lows. As you can see in the session, the price reached a high at this level and a low at this other level. In the session that I'm showing you, the price fell below the low. And in this case, we opened a short position, which was closed at the end of the session with a good profit. Now, since this is an intraday strategy, all positions are closed at the end of the day, which means that they only stay open for a few hours. It has a monetary stop loss, and the student has chosen not to add a take profit, which is also justified by the fact that the position as such will only last for a short time. The code is very simple, only a few lines, so that's also an advantage. Look, you don't have to be a NASA programmer to develop these codes. And then the simplicity is also an advantage, because it allows you to deal with any changes in the market. Let's look at the metrics to see how things have gone so far. We're seeing a net profit of $165,000 and a maximum loss of about $14,000. So again, the ratio is over 10. And yeah, we're very pleased with that. The equity line is smooth and rising. Very nice. Long side and short side. We can appreciate its regularity. The average trade, $141. Perfect for this strategy, especially considering that this is an intraday strategy. Here we see the monetary stop loss at about $2,000, or slightly less. And these green trades, the winners with a big gain that were not stopped by the profit target, continued their run. So yeah, it's also a great strategy. And now, Here we come to the winning strategy of the Strategy of the Month contest, a strategy that was submitted by Paolo. So, congratulations, Paolo. The strategy was developed for crude oil futures with a time frame of 5 and 1,440 minutes. This is a breakout type strategy. Again, like the ones we've seen, we use the highs and lows of the previous day. And in this case, when the maximum level I'm showing you is surpassed, in the next session, the strategy will open a long position. Of course, the opposite will happen for the short position. It has an intraday duration, so it is a strategy that closes all positions at the end of the day. And it features a monetary stop loss and take profit. The strategy was developed in full compliance with the Unger Method. But what does that mean? Well, first, it ensures symmetry. So all the rules applied to the long side also apply to the short side. And that is a very good way to trade in a commodity like crude oil. And then you wait for a market price compression before you enter breakout. So we want prices to reach stability somehow before they explode in a specific direction. And then we'll try to ride the price trend. There is also an operational time window, which is a window within which we are allowed to place orders, which have been set up very correctly. And it has, as I said, monetary exits in terms of stops and take profits at the correct levels. Now, what Paolo has done, it makes us so proud, and it shows us that the Unger Method can be replicated and can lead to excellent results. Just look at the metrics of the strategy. We got a net profit of $147,000. That's against a maximum loss of $11,000, giving us a ratio between these two values of over 13. Definitely a great parameter. The average trade, $183. Very good, considering that the strategy is intraday, so it only stays on the market for a few hours. And if we look at the results year by year, we see consistently positive years with a very high average trade. And the last metric that I haven't revealed yet, and that I'm going to show you now, is the equity curve. I mean, here it is. Look at this. An awesome equity curve. I mean, when we first saw it, our first impression was, wow. But the second was, let's see if the student didn't happen to fall into some development trap that would show us this as a result of his testing, but then would not give her the same results in live trading. So, what did we do? Well, one of the many tests to X-ray this strategy was to modify the code, make some small changes, and that way we'd see if the results were still good with those small changes. And, well, I gotta say that it passed all the tests that we did with flying colors. So we had to surrender and declare it the best strategy of the month. Congratulations, Paolo. Again, a great strategy indeed. Well, if you want to learn how to create independent trading strategies like the ones we've just seen, you are definitely in the right place. In fact, while learning, you can also enter this contest dedicated exclusively to Unger Academy students and compete to win a €1,000 Amazon gift card every month. So for more information, I invite you to please click on the link in the description of this video, and from there you can watch a free presentation by Andrea Unger. You can get a free copy of our best-selling book called The Unger Method, and you just need to cover the shipping costs. That's it. And finally, book a call with a member of our team to receive a free strategy consultation. If you enjoyed the video, please leave us a like and subscribe to our channel to stay updated on the release of all our new videos and our new content. We thank you so much for your attention, and we look forward to seeing you next time. Bye-bye for now.